Welcome back, everybody. It's Alex, and today we are talking about when and why the next crypto bull run will begin. We'll be hearing from Shark Tank's Kevin O'Leary, diving into some statistics and charts, and then wrapping up with some Bitcoin outlook. So let's dive right in. The first thing I want to address is a fantastic clip from Kevin O'Leary on why crypto is the future and why it's here to stay. So we're going to begin with that for some context, and then dive into when and why the next bull run will begin. So let's hear from Kevin here.
Because the largest economy on earth is financial services. I think crypto will be the 12th sector of the economy within 10 years because it adds so much liquidity, so much productivity, so much transparency, so much auditability. It's so much better than what we're doing right now, which is so expensive and so slow. If I want to transfer capital over to Zurich to buy Nestle stock in Swiss francs, it takes me days. And it costs me a fortune, and it's incredibly inefficient. I could do it in 2 seconds with a stable coin, and I can't yet because we don't have policy on both sides of the ocean that let me do that, but it's coming one day. And I think crypto and blockchain and the services and financial transactions, microtransactions, all of it are going to lend itself to this blockchain auditability, transparency, the ledger system. It all makes sense to me, and I think regulators are starting to figure that out.
Now that context is critical to understanding the importance of this next clip. In this next video, Kevin lays out where this money is going to be coming from next bull run and why it's so critical. After this, we'll lay out some additional analysis on top of that and then go into the Bitcoin outlook. So here is Kevin O'Leary on where the money is coming from and why it's going to cause a massive, massive run for crypto. Here we go.
The majority of invested capital on earth is held by sovereign and pension plans, about 90+% of it. They own zero crypto, nothing. And so for all the excitement about Bitcoin, 800 billion, that is absolutely a giant nothing burger. It is totally irrelevant. It's not held by any institutions that matter. Now, I'm an indexer, and I've talked about this many, many times. There's many indexers in the world, but we service sovereign funds, pension plans. Let's say you're an oil-rich country in the Middle East. You're making 250 million cash a day, US dollars, in oil revenues. You don't want to reinvest in oil. You want to invest in every other sector. So they'll go to an indexer like me and say, index the S&P 500, less energy, less airlines. That's the kind of index we do. So we see these fund flows, trillions of dollars of fund flows every year just going through the system. Indexers see that every 24 hours. And I always ask these institutions and these sovereign funds, what allocation would you put into Bitcoin? Just one. Bitcoin, which is the granddaddy digital asset, everybody knows that. What would you allocate if you could? And they said, well, we can't because our compliance department won't allow it, because the SEC hasn't ruled on it yet, and Larry Fink doesn't like it, and he's our biggest money manager, and all those other reasons. But they would allocate 50 to 100 basis points. Now, when you're running a $1 trillion mandate or an $800 billion mandate, which is some of the size of these funds, that's a ton of money. And that's a huge amount of demand that would come into the market. And as Bitcoin prices went past that 1% allocation, let's say, they'd sell it back down to 1%. But just importantly, if it dropped below 1%, they'd buy it back up. So there'd be an eternal bid forever. The volatility would drop dramatically. There'd be price appreciation in Bitcoin. It would be good for everybody involved in crypto. But we can't do it without policy. And so everybody should just get off this, let's be rogue, let's be crypto cowboys. Forget all that crap. It's time to get this real and get a tremendous amount of capital going into crypto because it's policy and it gets regulated and it's good for everybody.
That clip always gets me super pumped about the future of crypto, and now we're going to dive into a little bit of analysis around some of the points that he made. So the first thing I want to point out that's so critical is the identification of the fact that 800 billion market cap in crypto really is pennies on the dollar when you're talking about the overall financial services market and the larger pension fund market out there that is doing a lot of these larger institutional investments. And the next thing I want to point out is just kind of zooming out and giving ourselves an understanding of just how early we are. So this chart kind of compares the log scale adoption of the internet over time and then the log scale adoption of crypto. And you can actually see it's pretty accurate. And if not, crypto is accelerating a little bit faster. But essentially what this chart is saying is that we're basically at the 1997 equivalent of the internet currently in crypto. Now that should get you really excited because if you can remember, the Googles, the YouTubes, all of the kind of really, really important internet apps, internet programs didn't really get their footing until the early 2000s, even later than that, right? So giving an understanding that we are really, really that early in the crypto space kind of helps us zoom out, right? So right now we're only, around 150, 160 million users in crypto. And this chart's kind of predicting that we would be able to reach about 3.7 billion crypto users. So that's actually the amount that are existent on roughly on the internet. There's probably about 3 billion, 3.5 billion on the internet. And this is kind of saying, hey, if this log scale continues to take effect over time, by 2030, we could see over 3 billion, maybe even 4 billion crypto users. Now, obviously, a lot needs to happen until then, but I think this chart puts everything into perspective in terms of where we're at currently. Puts these 30, 40% pullbacks really into perspective for us in understanding just how early we are, right? If you could go back and buy Google, in 1997, you'd load it all up. You'd empty the bank and buy that sucker. So that's kind of what I just wanted to set expectations around. This is kind of what he's talking about when he's saying we really are pennies on the dollar in terms of where this market can go. Now, the next piece that I want to talk about are additional institutional investors breaking down and adding to what Kevin said about transparency and the ability to invest in crypto, right? So this is a very, very important piece here. So the importance of transparency for institutional investors cannot be understated. Due to the risk management nature of institutions, there must be a risk profile for each investment. These kinds of risk profiles can only be built for transparent assets, which cryptocurrencies simply aren't yet. So essentially, they can't even create a proposal to invest in cryptocurrencies because of the lack of transparency, because there is no regulation that creates that transparency. So again, that money is sitting on the sidelines, as you heard Kevin O'Leary echo. Now, however, with the help of regulations and ensuing transparency, not only could large institutional investors stomach greater investments in crypto, those investments could help stabilize asset prices overall. Now, this is what Kevin O'Leary was talking about when if crypto becomes that kind of valuable asset, let's say, for example, Bitcoin, every time it trades within a range, those institutional buyers are going to come in and pick it up at a low, basically keeping it within a rather stabilized channel, right? We're not dropping 70% over the course of a few weeks. So hopefully, once this institutional money comes in, we're going to see a lot more demand when we start dropping, having those 10% down days, 20% down weeks, because these institutional investors see the long-term value in these assets, and they're able to invest in them because of the compliance and regulations that have been put forth, and they're not going to let that free money go to waste when it crashes, 60 to 70%, and they're not going to allow it to crash that far. That's kind of the theory right now, and I think that it's pretty spot on. So definitely very, very exciting stuff. And one more little piece I want to share before we get into the timing around this regulation. We're going to hear from Kevin one more time. But I want to point out, so if you watch my videos, you've seen this chart before. We love to kind of follow institutional investments via this chart, inflows, outflows. What I want to point out, and what I think is super, super important, is the fact that we only have, roughly 10, little under 10 institutions here represented. Think about multiplying that by a factor of 10, a factor of 20, and not only a factor of 10 or 20, but saying that the 10 or 20 institutions that come in have way more capital than these, maybe even combined, right? When you're talking about Grayscale, that's probably the largest out of all these, but things like 3IQ, Purpose, these are rather, on a larger scale, very, very small funds, right? They're not managing trillions of dollars like some of these other big pension funds are. So right now, we're really on a very, very small scale when we're looking at and analyzing institutional investments. We're not at the level that a lot of these financial services companies are at, where they're dumping billions and billions, over the course of a few months into crypto, right? Where that could be the case in the future. So I just wanted to put that in perspective. Even when we're talking about institutions right now, when you hear all these articles talking about how institutions are buying, selling Bitcoin, you have to remember the institutions we're talking about, it's such a small group at the moment. And this small group does not have as much capital as some of these larger pension funds, some of these larger groups that Kevin O'Leary was talking about. So this is where we get into the idea of exponential growth into the next crypto bull run, because if we get that regulation, we see this chart exponentially grow, and the exposure that some of these institutions can get into crypto would be just astronomical in terms of what they used to be able to do basically now. So Now that we've covered that, I want to finish up with Kevin O'Leary talking about the timing of regulation, what that regulation will look like, and then we'll get into Bitcoin outlook. So here is Kevin O'Leary on the newest crypto regulation on the table, when that could happen, and the effect of that. So here he is.
I'm going to lay it out the way I see it and the way I'm investing. All right. What's going to happen is nothing before the midterms, but we're getting close. After the midterms, when the House is settled, and who knows what it'll look like, but I have a pretty good idea, we're going to get some policy. And the first policy, in my opinion, personal opinion here, is going to be around stablecoins. And here's what it's going to look like. It's going to be an open competitive market, just like you can find a money market at Schwab or a money market at Fidelity or a money market at some other financial institution. They're slightly different. You know, stable coins are payment systems, but they're also stores of value if you're willing to stake them out. You can make 4.5% on an annualized basis on a 30-day contract today, right now on USDC and other stable coins. But here's the policy I see coming. It's going to look like this. 30-day audit on the assets underneath it. You can bring any kind of stablecoin you want, but there's going to be a 30-day audit and what's in there. No assets supporting the token or coin with a duration more than 12 months. So if you're going to use T-bills, they got to be short duration, probably average of 6 months duration. And that's very much like a money market is run and completely FDIC insured. There may even be one or two of these stablecoin operators that apply to become a bank and become FDIC insured, in which case they would get trillions of dollars.
So with that context from Kevin, I want to set really clear expectations about Bitcoin price action into 2022 and next year. So really quickly, I think the first kind of expectation to set is that I wouldn't expect us to all of a sudden kind of bounce down here and then in November, after potential regulation, go straight up and to the right. So what I would expect to happen here is a large range bound channel between the 200-day simple moving average. That tends to be a pretty key point when we're trying to bounce in these bull bear transitions. And I would expect a wide range of, 35, 45% between that and this previous resistance that will hopefully flip into support if we go that low. So I'm thinking that, short to midterm range, we could be between 22.5 and 12 or 13K, even lower. Now, why I think that also is because we've seen similar movement in these consolidation periods back here in between those runs. So, this a little bit larger, but, 50, 60%. And then this as well in this consolidation period, we're seeing something around 40, 45 and into the 50s in terms of the range of consolidation. And very clearly compared to the other side, other areas of the graph, this looks rather steady. And I think we're going to see something similar to that leading up to potential regulation. So just want to set that expectation. I don't necessarily see us going to the moon this year, but I think 2023, 2024 will be really interesting, and I'm excited. Thank you guys so much for watching, and we'll see you in the next one.